So you want to travel the world and go enjoy your life and spend time with your family or take your kids on vacation, or whether you just want to pay your daily bills. So whether your main goal to invest in cover call ETF that pays monthly dividends or distribution is to pay your bills or to have the money to travel, it's very important for you to invest in an ETF that is more superior to the others, right? But I know in front of you have too many choices and it's hard sometimes to decide which ETF to invest your money. And that's why in this channel, I make it easier for you because I have a pointer on which type of ETF will be the best for you. And I have this point, and at the end of this video, we'll know between the two ETFs that I'm going to talk, which one is the best and superior to the other. So today I'm comparing Tesla Yield Max Option Income Strategy ETF versus CrunchShare China Internet and Cover Call Strategy. So we're going to first to look at overview of these two funds, and we're going to look at the strategy they use. So YieldMax Tesla Option Income Strategy is an active managed fund that seek to generate monthly income by selling and writing call option on Tesla. They use something called synthetic cover call writing. So they actually don't hold the Tesla stock itself, but they do have counterpart that they use the money that they have plus leverage to write call synthetically, and therefore generate high income on this one. This one here, it does invest in CrunchShare China Internet ETF, which is KWEB. So KWEB itself is an ETF that invests in internet-focused stocks in China, based in China, and so they use. So pretty much both of them they use one one security. This one uses Tesla. This one uses actually internet ETF itself. So it's one, but within this one you have more. Within KWEB you have more stocks inside that. But the fund itself, which is a clip, does not use those underlying stock separately, but they only use one. So you know the difference there. When you look at the investment objective, the fund objective, they have the Tesla, of course, they have two investment objectives. One is to have exposure to Tesla stock, and the other one, of course, to pay their monthly distribution, where this one here, the objective is to invest and have exposure to KWEB and also pay monthly distribution. So they both have the same goal and objective. So now let's look at the fund information. So the fund name here is Yield Max Tesla Option Strategy ETF, and ticker symbol is TSLY, where this one is CrunchShare Internet ETF, and ticker symbol is CLIP, where they are traded, both of them, they are traded on New York Stock Exchange. And we look at the fund under management. This one net asset value right now is about 21 million, where this one here fund and asset under management is about 122 million. We look at the fund gross expense ratio. This is 99, and this one it is about 95. When we look when these funds came into market, this one came in the January 12, 2023. This one here came out on November 22, 2022. At the moment right now, this one is pay 57.81. This one is 53.29. And they both, of course, pay monthly dividend distribution. We look at the price of these two funds. How much are they trading as of today or last Friday? This one up here, NAV, is about 19, so 1969, and this one is 16. So the other thing we're going to look is distribution. We look at the distribution here. They've both been paying dividend non-stop since they started, which is a pretty good sign. But then the only difference is that they've been, of course, paying inconsistently. So they don't pay every month is not the same. For example, this one pays, it started with the 56 cents, but they since increased to over $1, and then last month of May when they paid last, they paid about 86 cents. So that's lower than what they paid previous month in April, Where this one here, it did start also with 99 highest, and then it went a little bit down, and then last month of May, they did cut to 44 cents, which is 50% for more they paid months prior, and then this month they increased back to where it was 80 over 80 cents. So all in all, both they've been paying since they started, but the difference is that they've been paying not equal every month. This one, it's more closer to what he has been paying since he started, about 90, from 80 to 90. So the last thing we're going to look is performance of these funds. We can see since inception, this one fund here has returned about 3.48 minus 3.48. The index itself has returned -9. So the ETF itself has outperformed its index that's following. But when it comes to this one, I have a really good graph on performance. We'll look at this one here. So if you invested in 10,000 since inception, since February of this year, or January 31st, 2023, had you invest your $10,000 on YieldMax, you'd have $12,034, and this one you'd have 9,050. This one you'd have 9,057. So the return on Tesla yield will be about 20%, and on Crane share you would have -4. Those are performance. So we know the performance, we know the yield, we know all that stuff. So end of the day, we're going to a scorecard and see which ETF is the best for you to invest your money. We have 5 score strategy that I'm going to score on. The first one will be geography risk strategy, right? So where these two are invested. So the first one is invested US and globally, of course, because it's a Tesla stock. So we are following Tesla, right? Tesla is in Canada, Tesla is in US, Tesla is in Europe. When it comes to this one, it's focused only on internet companies in China. So there is a geographical risk right there, because it's only China. If something goes wrong with China, then that's it. Though this one, arguably, we can say it's only in the US, but it is more diversified a little bit more. So Tesla, TSLY, or Tesla YieldMax, wins on this score when it comes to geography. When it comes to fees, the Tesla has the highest yield and Clip has a little bit lower fee, so Clip wins on that. Diversification, which of these two ETF has more diversified their portfolio. When you look at this, Tesla is only invested in one company, which is Tesla. When it comes to Clip, has invested in many companies, right? Because it invests in an ETF that invests in other companies. So the Clip is more diversified. When it comes to performance between the two, we've seen the performance there. We look at the Clip. Tesla yield has outperformed the Clip, because Clip right now, when you look at the other website, on their website, is minus fee and everything like that. We'll look at that, is about 3 to 4% minus since January of this year. Of course, we don't have performance for a long time, because these two ETFs, they just came out. One came out late last year, this one here, and this one just came this year. So we're only gonna go back up to January of this year. When it comes to yield and distribution, of course, Tesla yield has more yield, and they've been paying more consistent to what they started. This one has differ a lot from month to month, and of course, the yield is a little bit lower than Tesla yield. So this one, of course, Tesla yield win on this category of yield. So overall, who wins here? We look at Tesla has 3 points and Clip has 2 points. So because of the yield, and the main thing is performance, because your money, you would have more money invested in Tesla versus yield, versus a Clip. So because of those reasons, we're going to give our winning point to Tesla TSLY, which is the Tesla yield. So there you have it. So if you like this video, just make sure you subscribe and hit the like button, please. Thank you very much. Till we meet again. Bye bye.